Hello students, welcome to my channel KT's Commerce Classes. Today we should explain again retirement of a partner part 2. What we will discuss today? We will discuss accounting treatment of goodwill. What is the treatment of goodwill? If any goodwill appear in the balance sheet, first it should be written off. In admission it was taught. Here also same concept. If any goodwill exists in the books of the firm, it should be written out. For that entry will be all partners capital account debit to goodwill. In what ratio it will be distributed? In old profit sharing ratio. Second entry, retiring partner share of goodwill is adjusted through partners capital account. Entry will be gaining partners capital account debit to retiring partners capital accounts. In what ratio it will be distributed? Gaining ratio. We know what gaining ratio equals to what? New ratio minus old ratio. Now one question has been given. A, B and C are partners sharing profit and losses in the ratio of 3:2:1. This is the old ratio given in the question. Now B retires and the goodwill is valued 1,05,000. A and C decided to show future profits in the ratio 4:3. Means continuing partners. Who is the continuing partners? A and C are the continuing partners. Sharing what ratio? Sharing the ratio of 4:3. Give journal entries when goodwill appear in the balance sheet. At what figure appearing in the balance sheet? 42,000. First, for finding out gaining ratio, equals to new ratio minus old ratio. Gaining ratio is what? New ratio minus old ratio. Now A's old share equals to question given 3/6 comma A's new share question given how much? 4/7. C's old share equals to 1/6. C's new share equals to 3/7. A gains equals to A's new ratio is how much? New ratio 4/7 minus 3/6 equals to 42. 7/6 means 24 minus 21 equals to 3/42. B gains equals C gains. C gains how much? C gains new ratio is how much? 3/7 minus 1/6. LCM will be 42. 7/6 means 18 minus 7 equals to 11/42. Therefore, gaining ratio between A and C equals to 3/42 is to 11/42 or 3:11. Now first what entry we will pass? The existing goodwill appear in the books should be written off. Journal entry will be A's capital account debit, B's capital account debit, C's capital account debit to goodwill account. Now goodwill, how much given in the question? Given in the question 42,000. In what ratio we should distribute? We will distribute in old ratio, that is 3:2:1. So C will be 7,000. It will be 14,000. It will be 21,000. Narration will be being existing goodwill. Written off in old profit sharing ratio three is to 2:1. That is the first entry for writing of the goodwill. Now, before doing the second journal entry, we should find B share of goodwill. Equals to rupees 1,05,000 into 2/6 equals to rupees 35,000. This 35,000 will be distributed among the continuing partners in which ratio? Gaining ratio. Journal entry will be A's capital account debit C's capital account debit to gaining partner gave up to B's capital account. So gaining partner capital account debit to sacrificing partner capital account. B only sacrificing. So how much? 35,000. Narration will be being B's share of goodwill transferred to A and C capital account in their gaining ratio of 3:11. So here it will be 7,500. It will be 27,500. So first what we did, we finded out the retiring partner share of goodwill. Distributed among whom? Distributed among gaining partners. In what ratio we should distribute? We should distribute in gaining ratio what we find out previously. M, N and O are partners sharing profit and losses in the ratio 3:2:1. N retires and his capital after making adjustment for reserves and profit on revaluation stands rupees 1,50,000. M and O agreed to pay him how much? 1,70,000 in full settlement of his claim. The new profit sharing ratio of M and O 3:2. Show journal entry for goodwill treatment. So old ratio how much given? M and O. Old ratio given 3:2:1. New ratio of M and O is 3:2. So first we have to find out gaining ratio. M's old share equals to 3/6. M's new share equals to 3 by 5. Then O's old share equals to 1 by 6. O's new share equals to 2 by 5. Now we know gaining ratio equals to what? Gaining ratio equals to new ratio minus old ratio. New ratio minus old ratio. Now M gains new ratio of M, how much given? 3 by 5 minus 3 by 6. LCM will be 30. 5 6 means 18 minus 15 equals to 3 by 30. O gains new ratio, how much given? 2 by 5 minus 1 by 6. LCM will be 30. 12 minus 5 equals to 7 by 30. Therefore, gaining ratio between M and O equals to 3 by 30 is to 7 by 30 or 3 is to 7. So we calculated gaining ratio. Now you see question telling when N retires after making adjustment of reserves and profit on revaluation stands how much? 1,50,000. But M and O agreed to pay him how much? 1,70,000. The difference between 1,70,000 and 1,50,000, that is what? Hidden goodwill. Hidden goodwill equals to $1,70,000 minus 1,50,000 equals to 20,000 rupees. How much? 20,000. Now we will proceed the journal entry. Who are the gaining partners? Gaining partner is M and O. So journal entry will be M's capital account debit, O's capital account debit, to N's capital account. Hidden goodwill is how much? 20,000. That will be distributed among the gaining partners in what ratio? Gaining ratio 3:7. It will be 6,000. This will be 14,000. Narration will be being N's share of goodwill adjusted to M and O capital accounts in their gaining ratio ratio 3:7.